Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 11th, 2024, and we're diving into the latest earnings report from REV Group. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss REV Group's performance, especially given their strong fiscal 2024 fourth quarter and full-year results.
Revenue and profitability overview. Let's start with the top line. REV Group reported net sales of $597.9 million for the fourth quarter of 2024. How does this compare to last year, and what does it mean for their profitability?
While net sales decreased from $693.3 million in the same quarter last year, it's important to note that the previous year's figures included $54.2 million from Collins Bus Corporation, which was divested. Excluding this, the decrease is primarily due to lower sales in the recreational vehicles segment. However, the company still achieved a net income of $41.7 million, up from $29.7 million last year, indicating strong profitability despite the sales dip.
And what about their adjusted figures?
The adjusted EBITDA for the quarter was $49.6 million, slightly down from $54 million last year. Adjusted net income was $26.9 million, or 51 per share, which is a bit lower than the $31.7 million, or 53 per share from the previous year. This reflects the impact of the divestiture and some operational challenges.
EPS forecast and analyst expectations. Analysts were forecasting an EPS of 43 cents for this quarter. How did REV Group perform against these expectations?
REV Group exceeded expectations with an adjusted EPS of 51 cents, outperforming the forecast by 8 cents. This beat is significant, especially considering the challenges in the recreational vehicles segment. It shows the company's ability to manage costs and improve margins effectively.
What does this tell us about the market's perception of REV Group?
Beating the EPS forecast is a positive signal to the market, suggesting that REV Group is managing its operations well and can deliver better than expected financial results, which could bolster investor confidence.
Strategic initiatives and future outlook. REV Group has announced some strategic initiatives, including a new $250 million share repurchase authorization and a 20% increase in their quarterly dividend. How do these moves align with their future outlook?
These initiatives reflect a strong commitment to returning value to shareholders. The Share Repurchase program provides flexibility to manage their capital structure, while the Dividend Increase signals confidence in their cash flow generation. For fiscal 2025, they are guiding net sales between $2.3 and $2.4 billion and adjusted EBITDA between $190 and $220 million, indicating a positive outlook.
What are the key drivers for this optimistic guidance?
The company is focusing on operational excellence and sustainable growth, with significant margin improvements in the specialty vehicles segment. They are also benefiting from strategic divestitures and cost discipline, which should support their financial targets.
Segment performance and risks. Let's delve into the segment performance. How did the specialty and recreational vehicles segments fare this quarter?
The specialty vehicles segment reported net sales of $439.9 million, a decrease from last year, but adjusted EBITDA increased to $50.2 million, reflecting strong price realization and demand for fire apparatus and ambulances. On the other hand, the recreational vehicles segment saw a significant drop in sales to $158.1 million, with adjusted EBITDA falling to $8.1 million due to lower shipments and increased discounting.
What risks should investors be aware of?
Investors should consider the cyclical nature of the recreational vehicles market and potential inflationary pressures. However, the company's strategic focus on high-margin segments and cost management should mitigate some of these risks.
Key takeaways. In summary, REV Group has delivered a strong performance for fiscal 2024, with a net income of $257.6 million and an adjusted EPS of 51 cents, beating analyst expectations. Their strategic initiatives, including a new share repurchase program and increased dividend, highlight their commitment to shareholder value. John, any final thoughts?
REV Group is well positioned for future growth with a solid financial foundation and strategic focus on high-margin segments. Investors should keep an eye on their execution against the fiscal 2025 guidance and any market developments that could impact their segments.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on REV Group's performance in the comments below.